The most popular ETFs in the world to retire off of dividends or capital appreciation are SCHD, which is the most popular dividend ETF in the world, and VOO or Vanguard's S&P 500 ETF, which is the most popular index in the world and is a fund that everybody wants to be and outperform. Now, what if I told you that you can get the best of both worlds by combining both SCHD for dividends as a stream of passive income in retirement and VGT, which is Vanguard's information technology ETF, for capital appreciation that has some of the best high-flying tech from the S&P 500 in its fund, for high growth that can fast-track your retirement 3 times faster than having only SCHD or even only VOO in your ETF portfolio. So instead of waiting a long time for your dividends to snowball inside of something like having only SCHD, or your growth inside of VOO to build up to over multiple millions and millions of dollars, which may take a lot of time and patience, by combining VGT and SCHD, not only can you retire in less years, but you can even have more money to retire off of and live on in retirement, which may be beneficial to you to pay off some expenses in retirement or even live a more lavish lifestyle. Now we're going to use Portfolio Visualizer, which is basically a website that will allow us to compare the returns of VOO, SCHD, as well as VGT. We can see our first portfolio of VOO, second of SCHD, and third of our combination 2-fund portfolio. Now the first thing to take a look at is the returns. So our first portfolio of just having VOO, we can see we have a really nice return over the past 10 years from $10,000 to over $39,257, which is a 13.79% CAGR. In our second portfolio of only SCHD, we have a $36,000 balance at the end of it from having a $10,000 initial investment with a 13.13% CAGR. And our third portfolio of our combination of VGT and SCHD has led to the highest returns of an astonishing $54,323 from our initial balance of $10,000, which we are started with, and we ended with a lot of money. Now, in comparison to our first portfolio, that combination ETF of having SCHD and VGT has led to over 50% more money compared to having only SCHD. So imagine having 50% more money in retirement or even in the next 10 years or 5 years if we invested in this 2-fund portfolio from having only one fund of SCHD, and compared to having VOO, $54,000 and $39,000 has led to over 34% returns, 34.26% more money compared to having only VOO. In terms of its portfolio growth, we can see our third fund of having VGT and SCHD has grown the highest over time, especially after 2020 when tech kind of started booming. So we can contribute to this growth to technology with VGT. As you can see over time, the past 5 years, even the past 10 years, this 2-fund portfolio of having a big tech growth fund and a dividend fund has even outperformed VOO and even itself of having just dividend as an ETF alone. Now, the benefits of having both SCHD and VGT as a combination portfolio is that it will perform very well in the good times when the market is up and there's positive sentiment. VGT will take over as the highest returning asset because tech usually does well when the market is up, and even in the bad times, this portfolio will do just fine as SCHD will take over VGT as the highest performing asset because dividend stocks usually do well in these recessionary and inflationary environments. It will also provide a stream of passive income to keep your portfolio afloat during these bad times. Now, if we did a simple projection with a compound interest calculator of just seeing our investment of having SCHD and VGT, if we have it on a more conservative approach with investing $5 per day, which adds up to over $300 a month in the next 40 years, we can see that we will end up with having over $6,406,000. And if we change the returns to 11%, which is around what SCHD and VOO have done priorly, we can see that in the next 40 years, we will have $2 million. So we will have over $6 million by having a combination portfolio and only $2 million if we had only VOO and only SCHD, which is why we will have 3 times as much more money, and it can even retire 3 times faster. And the final thing with this 2-fund portfolio is how easy and simple it is to invest inside of it, which comes to today's sponsor of our video, that being Try Share with their new investment mobile app called Share. Now Share is a mobile app that's designed to make investing simpler. Share's primary goal is to help investors invest in stocks or ETFs and make it super easy and simple with no gimmicks. Or maybe those that don't have a lot of money to invest initially, or maybe think it's super hard to start investing, or maybe even think, how could I possibly save for retirement? Share caters to anyone regardless of their financial situation or even their investment skill level. Share's goal is a piggy bank with a theme, where you can choose themed baskets of stocks, set your weekly investment amount, and Share will automatically do the work for you by buying all the stocks or ETFs that you choose from every week, and you'll accumulate shares over time like a personal piggy bank. Now I have the Share app open on my iPhone, and we can see that there's going to be many different strategies to choose from when you first open the app. As you can see, there's some really cool ones like AI, banking, bear case, big tech, biotech, a lot of really cool ones, even like Buffett's top 10. You can even track accredited investors like Warren Buffett and copy his investments and trades inside of Share. Now we're going to go to one of my favorite strategies, which is going to be technology and future for tech. So I'm going to be looking for something like AI, which is a strategy that I'm going to be choosing for demonstration purposes. Now, the cool thing about Share is it does have a projection of how much money you would have in 5 years based on its prior 5-year return of this strategy. So we can see if we had around $5 per week invested in this strategy, based on its 5-year returns, we'd have over $3,691. And if we had $10 a week invested, Share would give us around $7,382 of returns by investing in this AI strategy. Now, how Share buys these stocks is by dollar cost averaging, which is the best way to invest and buy stocks in my opinion, because it's going to be one way to set it and forget it in your investments, so you won't have to ever worry about, when am I going to buy a stock, if a stock is overvalued or undervalued. Share will buy these stocks every Monday to dollar cost average on your behalf. If we scroll down, we can see the breakdown of this strategy. It has over 182% returns in the past 5 years, which is 23% annually, which is way more than VGT and SCHD, combined. It even has amazing charts. We can see a 5-year return, 3-year and 1-year kind of toggling over on the app. And it even has the stocks, which is the creme de la creme of the strategy, which has Apple, Adobe, AMD, and many more. As it shows the returns and kind of a description of these different stocks that we have inside of this basket. Now, if we do like the strategy, which I do, we can clone it. And when we do clone it, we could give our strategy a name. We're going to click next and add a description. Now I'm going to skip that and customize our ETF. So basically, this is our own ETF now, our own ETF of AI future generative stocks. If I don't like a stock, I'm going to take it away. In my opinion, I'm going to be taking away Snowflake. I don't really know much about Snowflake or like their business. And I'll probably keep everything. I don't really know much about SMCI, so I'm probably going to take that one away. So we'll keep, the other stocks like Tesla, Nvidia, Microsoft, Apple, etc. We're going to click next, and this is where we're going to set our weekly investment. Now I'm going to be going with a lower one of around $5 per week. I think everyone should have $5 per week to invest. What is super cool about Share is that it does cater to anyone regardless of your financial situation. Now, if you could set away $5 a week to invest in your strategy, which is as simple as setting away a Starbucks coffee to invest for your future. We're going to be going to the next segment, which is that's it. We've created our strategy of AI. Now, a basket that I've created on my behalf with Share to invest $5 per week into is the stocks and ETFs that I solely love and buy all the time. This is my portfolio, which is going to be VOO, which is the S&P 500 ETF, SCHD, QQM, and VGT, which is, if I'm going to talk about these stocks, I do love to invest in them and put my money where my mouth is. And this strategy is called Marcos's Retirement. So if you guys want to copy this strategy, you guys can go into Share and do it yourself. Now, Share even has a simulator to project stocks or ETFs that we want to research and know more about. So for example, we can see all these different stocks on the side, but for our video, we're going to look up SCHD and see how this compares into the simulator. We can see that if we invested $20 per week evenly in these stocks for the past 5 years, we would have had invested $5,200 and over $6,898 invested today, which is a return of 1.3x. So we can see our total return is over 32% over the past 5 years. and a 5.81% annualized return with over $559 in dividends and a very high dividend yield of 4.31%. Now you guys might be saying, why is this return so low? Well, that's because we are dollar cost averaging every week and buying regardless of their stock price, whether SCHD is up or down. We are pretty much dollar cost averaging evenly and not riding the wave from the bottom to the top with a super high return like you see in these typical stock charts. So this is going to be a lot more accurate and representable of what real investing looks like. Now, if we do add VGT, which is our combination ETF, just look at the returns in the chart. We can see that it's pretty much doubled with a super high return, 47.5% total return, over an 8% annualized return, including, expense ratios and whatnot, $354 in dividends, and a 2.72% dividend yield. So that's super cool to see. Now, if you guys want to invest with confidence or even invest like the best, check out the link in my description for the Share app, and you can start saving and investing for your future with as little as $5 per week, which is super simple to whatever strategy that you guys choose. I promise you guys won't be let down or regret it. Now let's get back to our video. Another great thing about VGT and SCHD is that they have super low fees from their expense ratio. VGT has a very low expense ratio of 0.10%, which means that for every $10,000 invested into VGT, you'll be charged $10 annually to invest in it, and SCHD has even a lower expense ratio at 0.06%, so for every $10,000 you invest in SCHD, you'll be charged $6 annually to invest inside of it. A drawback by combining VGT and SCHD is pretty much sacrificing a dividend yield in our annual dividends, because if we do add VGT, we kind of lower our dividend yield from SCHD solely. As you can see, if we have only SCHD by our TriShare simulator, we have a 4.31% dividend yield. And if we go over here and add VGT to the mix, we can see that we kind of slash that dividend yield in half at around a 2.72% dividend yield from a 4.31% dividend yield of having only SCHD over the past 5 years. However, that is kind of more than having only VOO. As you can see, if we have only VOO, we do have a 1.61% dividend yield, which is super low compared to our dividend yield of having SCHD and VGT. So we might have a 50% less dividend yield. However, we are going to have a larger nest egg in retirement to pull out from due to higher returns overall, which is pretty much the best sacrifice you can make than waiting for your dividends to compound and snowball over time and having more money in general. Now that wraps it up for today's video. If you guys enjoyed it, please give it a like because cute puppy did, and comment down below if you guys are investing inside of this combination ETF of SCHD or VGT or other ETFs in this avenue. Check out Share app. I think it's one of the best investment apps to get started for long-term investing and really thinking about your financial future inside of the stock market and other ETFs that you guys want to invest in and your different strategies. Comment down below if you guys do have a strategy in mind. I'd love to hear your guys' strategy names. Mine was Marcus's retirement, which is kind of basic, but it's pretty much true. Those are ETFs that I want to retire on: VOO, SCHD, VGT, and QQQM. Hopefully you guys have a great rest of your day and take it easy. Peace.